It's Josh Houchins here again. Tonight, on this video, I want to talk about building a game plan for your investing business. I've been answering a lot of questions the past few weeks on people who are just getting into the business and asking a lot of hypothetical questions, or if I had X amount of dollars to invest, how should I start? Where should I get this money? So on and so forth. We've covered raising capital and some other sources of how to raise money to actually do projects in previous videos, and obviously in the seminar booklet it goes into further details. But basically, what I want to get at is how to build a game plan. And what I'm laying out is basically a hypothetical situation that's very reasonable that somebody could do. And what I want to really stress is that doing rehabs and flips, people think that that's the end business. That's what you're going to do for the next 20 years, which you can do, and I think you should do, but you need to look at flipping properties as a vehicle to get to building wealth. It helps you accumulate the cash you need to buy income producing properties. And if you look at your business in that standpoint, you're going to do very well. So basically the scenario that I'm laying out is going to be this. It's all hypothetical, obviously, but it's very reasonable that somebody could easily accomplish. Basically, if you set your goal, say for year one, that you're going to do 5 rehab projects. Your 5 rehab projects, you're going to average $30,000 per project in profit. So, some you might hit 60, some you might hit 20, so on and so forth. But just say at a bare minimum, you're making $30,000 per deal that you're doing. That's going to be $150,000 per year that you're making. So what I try to say is that I take 50% of that money, which is $75,000, and I want to invest that in 3 properties. And again, this is a hypothetical situation. I think the 50% rule is pretty good. If you're doing a higher volume, maybe lower it down to 30 or 40, but just say you're putting $75,000 into 3 separate properties. You could either buy a lower income property, fix it up a little bit and rent it out, or put $25,000 down, get the rest of it financed. It doesn't really matter how you do it, as long as your positive cash flow is $400 a month, because that's the scenario I'm using here. So those 3 properties you purchased in year one, you're getting $400 per month per property. That's $1,200 a month. That's $14,400 per year that you're making in passive income. Now let's blow that up. That doesn't seem great in year one, but you're building a game plan. What's your end game going to be? You're going to get to a point where you don't have to do 5 rehabs a year because you've built up a nice rental portfolio that's producing passive income to support you on a monthly basis. So basically, getting into the rental property business really should be your end game, or even if it's not property, it could be commercial, mobile home parks, any piece of real estate or parcel that is going to generate revenue to you. However you want to break it up to where you're getting those numbers. Everybody's game plan is going to be different. There's no exact formula for this. I mean, if you put $75,000 into one multifamily property that's giving you $1,200 a month in income after expenses are paid, then it's the same principle. It's all a numbers game. However you get there, there's not like a set number of properties that you need to have. I would base it on the numbers. Or if it's a multifamily, use every unit as a property, or however you want to set your scenario up. The basis of the point of this whole thing is that new investors don't understand that, flipping properties is great, but instead of using that as like the basis of your business, you want to use that as the wealth provider, or as I said a minute ago, the vehicle, the train to take you to your final destination, which is going to be to have enough passive income coming in every month to sustain your lifestyle or fund your business, or whatever your goal is. Everyone's going to be different. So basically, going back to this, so we've gotten 5 flips, which is very reasonable if you're going to do this full time. 5 flips is nothing, so I'm using a very low number, so it's something you can easily sustain and set a goal for. 5 flips, $30,000 in profit. I take $75,000 of that money and I invest it into rental properties, whether it's buying a lower end home for a cheap amount, or $25,000 down, or however you want to break it up. As long as you're reaching your income per month on that 75,000 that you invested, it's really irrelevant how you structure it out. So anyway, we're back to that. 1,200 a month, 14,400 a year. So let's reach out into the future. My 7-year plan. Okay, if I keep this up at 3 properties a year, that I'm getting 400 a month for. Okay, that's going to generate in 7 years. It's going to be $8,400 a month. So that means in 7 years I would have 21 properties or 21 units or whatever your game plan is. That's a pretty substantial monthly chunk coming in with not having to do anything or not adding your flipping or rehabbing business to that category. You could obviously, if you do 10 flips and you double that number, that's fine. I try to tell everybody to increase that every year, but I'm using a very bare minimum, a conservative number that just shows you an example of how quickly you can build your passive income, and not just give you some outrageous number that's probably not reachable for you. So 3 properties a year. Let's just say that you keep up that pace and you don't exceed any, and you just stay at the same flat rate for 20 years. That's going to end up giving you $24,000 a month in income, which in 20 years, that's not bad. Considering that you've already dumped the cash in for 20 years into each one of these properties, that's just $24,000 a month, not including what the properties are worth if you were to sell them, so on and so forth. So building wealth through income producing properties is really, in my opinion, the way to go. And that should be your end game for your investing business. You don't want to be a 20-year rehabber, because at the end you're done, and then once you're not rehabbing projects, there's no money coming in. You might have made a lot of money, but what is your money doing? Sitting in the bank. You're not producing monthly income from those chunks of money. It's all about putting that capital back to work in a constructive way. I try to really stress this to a lot of beginners because they are so excited about getting in a deal, rehabbing a deal, and getting paid, which everyone is. Everyone's excited about that, don't get me wrong. But what are you going to do with that money to build wealth over time? And that's what I always say is to flip, buy a rental, repeat, flip, buy a rental, repeat, flip, buy a rental, repeat, and it will build wealth, and it will generate you and your family a nice passive income stream. I mean, some people don't make $8,400 a month at a full-time job, but in 5 to 6 years, if you're rehabbing properties and then buying rental properties, it's very reasonable that you could reach that or exceed that. I mean, the scenario that I'm giving you is very, very low in my opinion. I think you should start 1 year with 3 and then 4 and 5, or even go higher, go 3, 6, 9, so on and so forth. So that number of passive income on a monthly basis is going to increase if you were to increase the number of purchases, obviously. But pick that number of I need $400 a month per property. And I know a lot of other investors and myself, I analyze the deal a lot more than just say I have to make $400 a month. I mean, the numbers have to work on your cash on cash investment, or you're going to have to figure in vacancies, repairs, taxes, insurance, the whole 9 yards. But I'm just doing this to someone who's just basically starting out, and I'm not trying to give you some crazy spreadsheet formula that you're probably not going to understand. But as you get more sophisticated in investing, you'll be able to pick these things up and you'll know what people are talking about. But it's not as hard as somebody wants to make it sound, to either scare you out of the business or have you pay them for your advice, for their advice. But basically that's what it is. Flip a property, take some of the profit, 40 to 50%, put it into a rental property, generate cash flow. Flip another property, do the exact same thing. Over the course of time, you've built up a nice nest egg of cash to keep your rehabbing business, to be able to operate, to put down money, to purchase properties without using loans. That'll obviously come over time as well, but that keeps cash in the business. You're able to run the business. Cash flow is the name of the game as you're building future wealth. I've heard a lot of people say, well, real estate risky and this and that and the other. I look at it this way: is in the United States, most people have to have somewhere to live. It's kind of a necessity. You need an apartment, house, condo, whatever. So you got to live somewhere. You got to sleep somewhere. Your kids got to come home somewhere. So there's always going to be a demand or someone who wants to rent a property from you. It's easier to rent obviously than to buy. So if it's a recession, people are renting and not buying, so on and so forth. I mean, there's tons of formulas that I'm aware of that, I'm just not going to go into detail about because it's really irrelevant. The principle of what I'm telling you is what I really am trying to, I guess, let people know and are aware of that are getting into the business, that needs to be your end game, to set up a game plan and then follow it. I'm actually sitting in my home office right now, and you can't see, but right up here on the wall, I have the same thing. For my rehabs, I have a goal of 50 offers a month. I'm going to put 50 offers a month in, and my goal, is to get, 4 properties a month, so on and so forth. Buy 4, sell 4, buy 4, sell 4, so on and so forth. That's just what I have set up for right there. And the months vary because some months are better than other months, so on and so forth. Rental properties, the same way. I have a minimum of 25 offers I need to put in a month. I want to accumulate 5 to 7 properties per month, and go from there in 2015. That's my goals. Not years past. That's just what I'm shooting for this year. And that fluctuates as well too. Certain months I have more, and certain months I have less. But it fits my niche and what I do. Everyone's goals are going to be different, but what I'm putting out here at 5 rehabs, 3 rentals a year is very basic, and I think someone could easily accomplish that. And within 5 years, you're going to be close to making 6 figures a year without doing any rehabs. Managing new properties or having someone else manage your properties for you. It's very crucial that you get your game plan and your end game set up to be, income producing properties. It's going to allow your family and you to, have a lot more freedom. And as I've been saying, it's the passive income. And if your monthly budget for your family is, say, $5,000, that's what it costs you to live. It's groceries, car payments, house payments, rent payment, whatever your lifestyle entails, kids' schools or daycares or, gas in your vehicles, whatever cost you have, just say it's $5,000 a month. Well, by year 7 here, you're making $8,400 a month. So you've got $3,400 worth of income that, is just, you can either save it, roll it back, put it in another investment, an investment vehicle. It would be a 401k, an IRA. Sorry for starting, it's a little bit late. I'm up late working, so. But that basically is your goal. Once your rental or portfolio income, the passive income that you've built in that little niche of your business exceeds your monthly expenses, that $5,000 mark for, say, your family, then theoretically you're rich. You don't have to get up from 9 to 5 to go to work because your monthly income from your portfolio is exceeding your monthly bills. And then obviously the more you increase that income, you could probably upgrade your lifestyle a little bit, or just if you're happy where you are, just stay where you are and just pocket the rest of that money and keep rolling it back into your portfolio. And then once you build up enough money coming in from your portfolio, you don't really need to do as many rehabs. You can just save money, buy a house, save money, buy a house, that excess income. And then you get to a point where, you're sustainable. You don't need to keep going, or if you want to keep going, keep doing it month in, month out. And it'll lead to a very successful wealth building system for yourself. To me, it's really the simplest way to build wealth and be financially free. So I hope that helps some of the people I've been talking with and some of the stuff I've been trying to explain on different forums and whatnot online, and people I've actually personally met with in the last couple of weeks, trying to show some new investors, how to get in the business and how certain things work and where you should be. And I know a lot of people pump up the hype of how much money you're going to make right now. I mean, I try to be conservative about it. And what is your end game? Where are you going to want to be in 5, 10, 15 years? And then plan it, and then just execute it. It's as simple as that. Set yourself up with a very simple chart. You don't have to get into crazy details and this and that. Just set up basic numbers and try to accomplish them, and you can do it. It's not rocket science. So I hope that helped. I hope that explains some of the stuff that I was talking about throughout the week. But again, I appreciate you watching the video, and you can catch me, on Bigger Pockets, my website, Facebook pages. If you have any questions or anything, feel free to contact me. I'm fairly accessible. Contact me via email or anywhere else. So happy investing, and have a good rest of your weekend.